as far as uranium goes, and kudos to Scott Sinclair and anybody who jumped on this trade. URNM, I have a position in this myself. Was adding to it earlier this week. I would not be buying it here if you don't own it. But if you do, looking at the weekly, this is a major breakout. And there's a number of and really pretty nice weekly breakout here. So depending on your time frame, I would say, if you're shorter term, could you be de-risking here? Yeah, sure. If you're really tight. But all the fundamentals look very, very bullish. And, how much color do you want me to give there? Because the reality is, and the tricky part about uranium is it's very small and it's very niche and it can be volatile. So people need to understand that as well. But generally speaking, even the URNM, like if you look, not many funds own this. Nobody owns it. So exactly. And even the stocks in the space, it's so much smaller. If oil is, a cow, uranium is a mosquito, in terms of just the size of the market and even the number of investable ideas, where even a lot of the tickers inside of URNM are very small companies, most of which are not profitable. And the physical market has taken off in the last 6 months, really. And the stocks are now starting to come out of some of these bases. Cameco, it was the exception. It kind of followed the physical market because it's sort of the only investable name really last year. And we were actually pointing this out on the MPA platform for folks, last summer when it was emerging. But I think, look, you've got this classic situation of everybody needs the material. There's not enough of it. And, the old bear markets are the authors of bull markets and vice versa. We had a how many year bear market in this. Now it's having its turn. So, why I like it, how I would handle the position. I would use some of your classic O'Neill type rules in a situation like URNM, where you can use a 50-day trail, depending on how we hold, maybe you do an 8-week rule for part of the position. I just think, for a variety of reasons, it's one to potentially try and continue to trade around and hold, acting really well, obviously today. I think this breakout has to do with, I saw a news item as well, that Kazatomprom, one of the biggest producers in the world, is basically saying they're going to have a production shortfall. Well, where's the money going to, what are they going to do? They got to pay up to get this stuff. And for people who don't understand how this commodity works, it's very long cycle. So, and what effectively winds up happening is, listen, you've got producers and then the buyers are all utilities. Well, if they don't have enough material, there's no price. They're not going to shut our uranium reactor down. That's not how this market works. It's not like, well, we can't buy the material, we shut it down. No, they pay, and they pay through the nose for it. So, and I read a report a few weeks ago of some of the utilities in the US basically effectively saying there is no price we won't pay for material. So this is why you can have these big runs in commodities, when supply is really, really constrained. And I think that's what we're looking at here.
Right. So you said you've been trading around it for a number of years. Talk to us about the current trade and where you were getting back in, if you were adding, where was that? And if you're taking profits today, how much are you taking off?
Yeah. So really all really good questions here. Just bringing this up on another screen so I can give you the exact date. So more recently, I got chopped around a little bit in this base, but say for URNM, I was actually starting to buy on 1024 as it was coming out of this, I would call this a cheat or a low cheat. The stock, this is how I like to play pullbacks, rather than just sort of sticking my neck out there and buying as the market's coming to me and hoping it bottoms. I like to see the sign. You got a number of good closes down there. It looks like it's found a support. And you see that reversal bar you had 2 positive reversal bars, 1019, 1023. That was sort of a sign to say, okay, if we take out those little highs, I'll start a position. And when I say start a position, normally I don't ever put on my entire line sort of coming out of that bottom of the cup. Because I'd rather start the position there, see if we find stability. And then if things just blast off and I never get an opportunity, at least I have something on. Because I don't know, the old, every big decline starts as a small pullback. And then then you can sort of build into the position as the chart, if it improves. And then, so I was actually adding on 1113, and this is one, memory serves me correct, I actually tried to buy a little bit more, and the stock was sort of getting away from me, which is also a good sign, but it can be a little frustrating when you're trying. If I can increase my exposure without increasing my overall risk, that is the best setup for me. Is there a way that I can get more aggressive without just taking more risk? And something I'm always trying to communicate and teach with people is that is how you can make sizable returns in a short period of time. You hear people say, oh, I want to put on a big position. Well, everybody wants to put on a big position, but if you just sort of cowboy willy-nilly, just grab a bunch of shares, all you're really going to do is increase your volatility. You may increase your returns, but with that is going to come an increase in volatility. My goal is, what we like to call asymmetric leverage, or those asymmetric returns, where you can increase your returns without having to do that. So that first buy on the left, buy a position, put my stop at that low. Now I am going to add where you marked it again, and then move my stop up subsequently. So I sort of have like a double position. But if you look at the overall risk now, I've sort of de-risked that first piece as the stock is stair-stepping its way up, and moving my stop up incrementally at the same time. Now, in this particular case, I wound up having a little bit bigger position. It wasn't huge. And then when we had that violation of the 50, I sort of had a decision to make. Do I de-risk a portion here? And so I did stair-step my way back down, but sort of back to the original line, and kind of got out a little less than break even on that bump. And then you just sort of wait, where you sort of pick lines in the sand to say, listen, how much pain am I willing to take? And you can also make some portfolio decisions. But so I held on to that initial line, and then, we sort of just tightened up. If you look at the way the volume dried up in the last couple of weeks, largest dry up since the beginning of the move. Now, I know some of that was coincident with holidays, but the reality is there wasn't many sellers. And that was really a low cheat in my mind. That was kind of perfect, where now your line of demarcation is sort of right there. If any volume comes into the name, prices should go higher. If you're doing your analysis properly, well, look what we have here. So it's nice when they work out in your favor. So I added everything back and then a little bit more. I did that for two reasons. One, the setup was really good. It was tight. It is really tighter than we've had in this sort of entire base.
Right.
And things in the rest of my portfolio are kind of going well. So those are sort of the two things I often say to people. Look at the setup, but then also, how's your trading been going? Like, why get aggressive even in a great setup if great setups haven't been working? So more recently, the good setups have been working. So I got a little bit more aggressive. Now, so let's say in my example, if you go overweight on a really tight stop like this, on a gap today, I'm going to de-risk the whole trade, because I'm up, say 3-4 to 1, depending on how tight you were the other day. This is where I like to sell into that strength a portion. Now I've paid for anything I'm going to be holding from here. I have financed with profits up front the ability to hold shares for the much larger move. And this is sort of, the concept I like to say is, don't ever let a losing trade become an investment, but you can let a winning trade become an investment. Trade to invest, would be the philosophy.
I love that.
And so people will say, well, which one do you like for a bigger move? I don't know, because I haven't seen the price action yet. But in a situation like this, I've nailed the timing. Now I'm sitting here saying, well, I can free roll. If you like the casino example, I'm not a gambler, but I'm playing with house money. I can free roll the remaining shares. That's the way Mark Minervini would often say it.
Right.
So that's precisely how I'm handling this right now. And I could ping I'm guessing, we sold a little bit of shares just into this gap. I also, look, when you get gaps like this, I'm not an always take the money and run guy. But when I'm at a multiple of my risk, and they're giving you that sort of gap alpha type extended move, I like to leak out at least a little bit. So that was the thinking here today.
Great. Very well said. And I love being able to walk through the trade and the mindset in real time here. So thank you so much for this example. And Scott St. Clair confirming a number of minutes ago that he too is taking some off here. I'm not sure how much of his position, but he definitely is a sell into strength kind of guy too. So thank you so
let me just
much.
add this. Let me just add too. Like this is where, to me, this is where the real challenge in trading is managing the winners. Losers should take care of themselves.
Right.
Like that's just a cost of doing business. And that this is where people have to define themselves. If you are a longer term position trader, you shouldn't be selling anything today. Like that's just, you have to know that, but you're going to sacrifice that shorter term move. You're going to have to sit through a little bit more volatility if this name pulls back in. But if you bought this properly, you are in pole position now. So if you're a position, longer term, Jim Ropel, David Ryan type trader, you have to know, that listen, the pullbacks are probably going to be a little bit more normal, but you're not playing for this first 10%, 12% breakout. You're playing for, I don't know, 30, 50, 100. And just understanding, those things. You can't be everything. So this is why you got to define yourself to be something.